Well, unfortunately, I think the news today is good, but I think the market still has a ways to go to get a real solid footing. I mean, October, you're right, September is always a bad month, but October could also be a very bad month. You know, people forget that's when most of the big crashes were in October. So we'll have to wait and see. But, you know, we're starting off on the right track, that's for sure. You know, like you mentioned, today's the first, and the market kind of slow going. But now with the Merck news out, that shot the market right up, shot the airlines up, the cruise ships up, the hotels up. All the stay-at-home stocks now are taking a hit, and now it's go out and go on vacation to the Adirondack maybe. But you know, this pill, if it shows good promising and it works, that's going to be a real boost to the market. We've seen a couple of things going on now. We saw today inflation up 3.5% year over year. That's the highest it's up in 30 years. You know, um, it's a 3 point, yeah, 3.5. That's the highest up in over 30 years. Second, we still have Jerome Powell. We don't know what he's going to do. Is he going to cut back? Is he going to taper this year? Is it going to be now? Some are saying next year. If he tapers, it could be a big shock, not a shock, but a big hit to the market. We know he's going to do something. We think he's going to do something, but we're not sure. The job market, even though it's still strong, people aren't going out looking for jobs. They're still sitting home, I guess, and that's weighing on the market also. So there are a lot of factors that could drag this market down. Generally, I think the stock market's okay. I don't see a boom at the end of the year, but now this is the catalyst. Now this Merck pill. If in fact this Merck pill does work, which they're saying it does, cuts it by 50%, you could see a return to semi-normal pretty quickly. People will go out spending, jobs will start hiring again. People feel safe to go to big cities like New York, and go out to dinner and restaurants. We're pinning a lot on that pill. We really are. So if that works, I think we could have a good end of the year. If it goes slow, if people start getting sick, that'd be a big problem. But I think now it looks good. It looks like people are going to go back to work. Economy's going to stay strong. And, you know, that's what people were nervous about. This Delta virus was getting a lot of investors I knew and traders nervous that if it did take off, could we shut down again? Things like that. And if that happened, it would be horrible. But right now, it looks like things are going to go ahead pretty quickly. They do that every 2 years. They have this, oh, we're going to shut down the economy, you know, or shut it down. So they never do. These politicians are spineless. They're not going to ever shut the economy down. You know, they'll take it right to the precipice, but then back off. But that said, eventually we will have a big problem. We keep kicking this can down the road, but we've printed so much money, it's insane. You know, these programs have to have a lid on them, and they're not doing that. I don't know where they. I mean, the Democrats want to spend what $3.8 trillion. I mean, man, we just don't have that money anymore. This isn't the United States of the '60s or '70s. So I think uh, eventually we're going to have to face that issue. But right now, we kick the can down the road. They're not going to close the government, that's for sure. They're not this. And you got midterms next year. Neither party wants to close the government down. That'll look bad on their resume. So I think there'll be business as usual with funny money, and that's why we see an inflation at a 30-year high also. They just keep printing this money. It's bad, Jackie. It's bad to do that. And right now, we're going to go along, but eventually, someone's got to pay for it. It's that simple. Real professional investors are cautious, but there's one thing we didn't mention that we should mention. It's the U.S. dollar. The dollar has just taken a sharp rise up. It was at 193 when I looked last. I think it was 193 or up 93. And that's going to hurt all the multinationals because their merchandise is be more expensive to ship into the United States. When that happens, you see the market capitulate and come in. So we're keeping an eye on the dollar. If the dollar keeps going up, that's going to bring the market down for sure. And that has some investors worried because, you know, so much comes from overseas that's going to get expected, cause more inflation. People will spend less. And that'll, you know, this economy is powered by consumer spending. So with a high dollar, even though it's good on paper for the economy, it's actually not the best thing to have right now. And we'll see what happens there. But I think investors in general should be picking stocks. I mean, I think if this pill takes effect, you want to get in, especially for the like the Disneys and the and you know anything that has to do with vacation. The Royal Caribbean will take a good shot on the upside. Princess Cruises, airlines are going to do well. I think JP Morgan just upped their guidance on airlines today after the pill was announced. So I would jump in on some of those stocks. So they will get a little rise right in here. And it could tend them to the end of the year because holiday season, people are going to travel starting from Thanksgiving to New Year's. So if this pill shows promise, expect the airlines to be crowded, expect them to show good earnings. It's good for the investor. So I like the airlines. I like the cruise ships. I would get in now on those two especially, and we'll see what happens. But you still have time to get out in case this pill doesn't work. But if the pill works, it's coming at a great time with the holiday season. Really, just 2 months away now. We're October, so by December, people will be out there spending, traveling, going up to New York State, like some people I know. So I would just do that. I would start putting my foot in lightly, but look for the not stay-at-home stocks right now, but to go out and enjoy yourself. Oil sector bounces all over, but actually the oil sector overall this year wasn't too bad. So I think, it's been a little weak, obviously, lately, but I think and remember, come winter, people always think gasoline, but oil also is the biggest heating product in America. So I think you'll see heating oil bounce up. It always does in northern countries here. And right now, I'm up in the Adirondacks, and it's chilly up here. I don't have a fire going, but when I woke up this morning, it was 48 degrees. So, I mean, it's getting to that point where you're going to want to start a fire and get that oil burner going. So I think oil's a good hedge to get involved in right now, also with the winter coming.